Here we are. All right. I'm going to try and go live here with Atlas today. He's feeling a little sickly. So maybe he'll pop in a bit, maybe not. But for now, I did want to go live just to kind of check on our 100 wax investment and see how that's going. But yeah, I'm going to chill here, see if some people join in, and if so, then great. I'll dive into some market stuff. But if not, then I don't know. Let's see. I'm gonna check on my Novo Pangea in the meantime. See if I can get some gaming stuff going here in the background while people roll in. I made some stream pings, announced that I was going live, so let's see how it goes. Let's see. Here we go. I'm going to check on my Novo Pangea right now first while people are maybe rolling in. By the way, if you are rolling in, welcome, but I can't see you just yet. So I'll toggle back and forth here, kind of solo piloting. Okay, I only have one more residential to find. Let's see, so I'll just click on that. Let's see. Everyone's charging so fucking much lately. I'm looking for something like around 0.6 or something. Like, these are all way too expensive. Motherfuckers, dude. Shadow Realm people are pretty into their extorted prices. Yeah, I don't know. I don't know if this guy's gonna get any rest today. I'm not paying these fucking trumped up prices. Good thing I have my own fucking place. I'll just have to wait for this to run out. It's my healing or my rest goes down every 9 hours, so I can at least get 4 of my guys for free up in there. But yeah, whatever. All my other guys are resting now anyway, so here, check out my fucking District 5 is just happening. Fucking slammed. We got 6,900 staked Novo tokens, so no big deal or anything, Tell your friends. Tell your friends about my district. Actually, I think there may be some spot. No, these are taken. Let's see. If I check, let's see if there's any available move-in space here. I don't think so. Actually, it looks like they're all taken now. Good call, Autumn's Toys, by the way, for letting me know it was time to migrate my my buildings and stuff over here, because my District 1 would have been a sad comparison to this. Here, actually, I'll show you the District 1 I'm in, because I staked a couple things in District 1. Yeah, it looks so empty with the thing off, but yeah, it's definitely not quite there. You can see here's my stake first, and I have to wait still 23 days before I can get it back. Once I get it back, I'm probably gonna migrate the stake over to the new place as well, which is District 5. But yeah, staking to the town hall has been live for a minute. Let me see. I'm gonna toggle back to my webcam so I can see. Oh, what up, Jeff? Hey, thanks for the support, yo. We'll see how I do. I did want to poke in today because I was looking at the markets and stuff, and I'm like, oh man, Jerome Powell talked this morning to the Congress, had some interesting things to say about stable coins, or at least the Congresswoman asked some interesting questions about stable coins that Jerome Powell deflected really expertly by saying that those regulations that the Congresswoman was bringing up were written by the SEC and not by the Fed. So he didn't want to comment on it, which was like, oh, good cop out, saving it, push the buck to someone else. It worked. But generally speaking, I think he had relatively positive sentiment on like the stablecoin regulation environment, because I believe like he said something very close to, in a perfectly regulated world, stable coins do have a place within the United States banking system. But the if is doing a lot of heavy lifting in that sentence. So like if things are regulated, he doesn't have an issue with it. His issue is that the stablecoin environment in crypto is so unregulated. But yeah, what up, Prince X? Lewis is doing a little sick today, or feeling a little sick today with his stomach. I think his stomach's still been on the fritz for a while, and I think last night he had like a late night sausage that didn't really it wasn't the right decision to make, I think. but it's just me for now. I wanted to pop in, do some chart reading, take a look at these markets. So, let's just dive into it. I feel like people can roll in. It kind of sucks because I can't like toggle back and forth. Here, I'll show you what will happen. Like, I want to show off my web, but when I do that, you're going to see the infinite mirror thing. So, toggling back here is how I read the chat. So I guess just bear with me. If you see this pop up, it's because I want to see if anyone has anything to say in the chat or anything like that. But until then, I'm just gonna get started because I want to poke in on this crypto market today, which was getting kind of tumultuous. I'm looking at Ethereum right now, and let's go to the daily chart, and you can see we've just flipped the strength bands from my indicator here to red. We still haven't gotten our bear print, but let me also reduce some of these and remove those resistance lines. Okay, let's take a look really quick at the crypto market here. We're looking at the daily chart. We're starting to like basically what I think we're seeing is the start of like the next like sell off here. We're being rejected basically by the resistance levels that we've drawn out here. The green like line, we're basically right on the second line. And the way I had these two zones marked was kind of like this range between this green and this red had been a range that we were trading in for several months here. And then above that, we have, the green to the red here, which would be the range once we broke out of here. You can see this little peak got there. But we were looking for in the last few weeks here, either this resistance point to become a support point to push us into this upper range, or for it to basically solidify as resistance and confirm that we're still in this like lower range here. And I feel like we're seeing it being rejected over and over again on the daily, and now starting to see it uh potentially moving into like selling off territory. So I actually had a few short sells open, which maybe are closing now in profit because I think I set a stop loss, uh like an in profit stop loss at 1553, which I saw it just touched a second ago. But yeah, I'm probably planning to continue to maintain that short just because we're a little bit on the oversold side on the daily. Doesn't mean I think we're going to bounce immediately here. I think it's possible we continue to sell off now. And then looking at it a little closer, like the 4 hour, we're definitely like sticking below this middle line, being rejected over and over again. And like you can see, we're kind of right on that the support, which we're looking to turn back into resistance, and it'll become the upper resistance of our big range here. So last week we kind of thought the markets were potentially going to continue to go down. This week I don't think we're seeing much different. We're basically seeing that play out. So if we zoom all the way back out to the market, I'm sorry, to the 1 week, and let's hide those lines. You can see, last week we did kind of come down again a little bit, and the top here for Bitcoin the last week had kind of like uh this tweezer top, it's called, where you have like the candles of both of the wicks of both of the candles closing with about the same length. That's generally considered a bearish indication, like that the market may flip. We did get a bull print from my script, but we haven't flipped the bands to green. I wouldn't act on just a bull print within a red band just yet. So we are waiting to see, will the Bitcoin price basically, will it bounce on this middle line, which will be close to the middle B band line on the weekly chart, which, let's see if I still have that up. Yeah, so it is literally right on the middle B band line. It's just a little like neater. I like the way that this one draws a little bit nicer. But so we're looking to see if this will become basically support as we're moving down with these bearish indications on the weekly, probably to retest here, and then potentially failing that retest and moving again into the lower ranges we've been in for the crypto market. That's further informed by the general stock market sentiment, where you have the SPY having pushed on the weekly and now bouncing around here, but it is also coming up on on the daily chart here, being rejected again right here on the middle B band line, if you will, or like I'm using the strength bands now because I just have been working with this for so long. I like this look a little bit better. But if you're trying to follow along and you don't have access to this one, using the Bollinger Bands gives you a similar kind of like the middle line is kind of is kind of where we want to see either support or resistance level. If as long as we're closing below it, it's generally moving down. As long as we're closing above it, we're generally moving up, which is usually like the case when you're bouncing around on, those Bollinger Band indicators. It's a little more um I guess it's a little less accurate, and sometimes it moves a little like further, like here you're pushing, way below it, where it's like, I don't know, it shouldn't really, like flatten. I don't like that it like swings a little bit more wildly than like the strength band that Sid and I had been working on here. Um, but yeah, so looking at that, you can see on the daily chart, we're kind of like in the middle range here on the Stotch, meaning that, there's room up, there's room down. It could move either direction as far as that is concerned. So not crazy oversold or overbought yet. And because we are being rejected on the daily right at the middle line here, I think we can continue to take our sentiment short for the coming week. So this is the daily chart for the SPY. And then if we go to the weekly as well, you can see the weeks are closing here. We're moving down though. And again, on balance, volume has still failed to make higher highs, is continuing to make lower lows. This trend on the weekly, especially not flipping yet, is a very still bearish indicator for me. And I really want to see the on balance volume for the SPY flip and start making some higher highs before I am convinced by movement on the chart, just on the spot price in the opposite direction of what we've been seeing, for months and months on this downtrend. Sure, we are closing currently like right at the B bands, maybe right above it. And we had a few weeks now that have been above it, but it's hard to say, if we bounce here now and keep climbing, or if we don't. And I think we don't. I think we lose this here now and move further down. Part of that is going to be further informed by the monthly. So if we want to get a clearer picture on whatever time frame we're looking at on a chart, zooming out on that same chart to further bias our opinion will help. And you can see on the monthly, we're different closing below the Bollinger Band line. If I use my indicator here, we have a bear print already on the monthly, and we're not quite flipped yet. So this would also be maybe not acting just yet on this print, but waiting for the flip to red to take short positions on the SPY, and therefore short positions across the general market. Another way to further bias our opinions to move short, let's actually look at Bitcoin also on the monthly, well below, still like, not flatlining on oversold still. So definitely has room to like fluctuate down here. And then like we saw on the weekly chart for Bitcoin, we're still like in the red. We had the tweezer top close. That was, I guess, a week ago now, the tweezer top close. And that tweezer top close is again the candlesticks being about the same length on two candles that are top in the chart right here, and then moving. This generally indicates a move down, and that move down is playing out currently. And again, I believe we're going to move down at least to this Bollinger Band middle line, and potentially below that still. So moving on to wax, with all this in mind, general market we're thinking is moving down a bit. The wax weekly is also come down over the last week. We are also retesting that middle B band line, which is notably higher now than my strength bands too. So personally, I'm going to bias towards my own indicator, but let's zoom in on the wax on the daily, and we can actually see that we are, closing below the B bands, getting a bear print, getting a flip to red now. And so here we are on the daily chart, looking probably to re-enter. Let's see if we check out our zones here. So you can see here, this is the 8 cents resistance that we had charted a long time ago, which had, turned to support for a few days and now failed as support. And as we've, lost that, we're now moving back down potentially to retest previous support levels around 5 cents for wax again. So we were at 8 cents. Now it looks like 6.7 or so, and potentially moving down. So we're seeing this week lots of bearish indicators on the macro markets, on the crypto markets. And one more, let's look at one more that's interesting. If we go to all assets and type in DXY, the DXY is the US dollar currency index. So this one, we'd want to see it climbing, which we do, because as the US dollar index climbs, it effectively shows the strength of dollars increasing. And as the strength of the dollar increases, people, enter dollars with their positions, meaning they sell out of equity. So this market generally moves in the inverse of the stocks. Uh, so you can see, like, here is, let's see, this is the DXY, 2022 climbing, 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 and then here would be like the SPY dropping, 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 and then here where it's like starting to flatline and climb a little bit, you saw that the DXY over this kind of time span was moving in the opposite direction. So let's flip this again, DXY. So you can see very much inverted. As the stock market was dumping, the DXY was climbing. And again, we're seeing something similar happen now. DXY gaining strength, flipping its trend, bouncing on the Bollinger Band middle line pretty aggressively today. And so all of these factors kind of are helping to bias my overall sentiment for thinking the markets are continuing their sell-off into next week and potentially beyond, but definitely we try to take it 1 week at a time on Tuesdays. So for the coming week, I think we're going to move down, and that opinion is biased by SPY markets closing poorly on the weekly, the monthly, or at least closing questionably, because they were closing above middle lines, but what we weren't seeing was higher on balance volume, and we're not like seeing a crazy topped out or bottomed out stotch either. And then you can see here on the daily, we're closing actually the SPY below middle B band lines, starting to flip red. Like this, could be the beginning of the sell off here, is kind of what I'm kind of expecting for the week. That also coupled with today, Jerome Powell spoke to Congress and kind of gave an indication that the next FOMC meeting will lead to about a 0.5% increase in in interest again. Again, those types of increases in interest rates are bad for equity values. Like, you'll usually, generally speaking, as interest rates are raised by the Fed, stocks and equity prices fall. So with all of that in mind, let's move into our 100 wax. But let me first toggle back over here and see if anyone's, hey, what's up? What's up? Thanks for joining. Thanks for putting up with me toggling back and forth here. What I can do while I'm on this screen is do this, swap it out just for my beautiful full screen face. But yeah, I just wanted to look at the markets today, especially on the piggybacking on the end of Jerome Powell speaking at Congress this morning. There's always, I think the next FOMC meeting's on the 22nd of this month. But yeah, so what I wanted to go live, even though Lewis was kind of not able to join today, and like he usually is, doing some music and helping run like the giveaways or keeping my eyes on the chat. So thanks for kind of bearing with me while I kind of solo this. But yeah, so I wanted to look at the market. I think they're moving down still. We did think the same last week, so hopefully you're not tired of me being kind of like a bear all the time here and feeling like every week I'm like, oh, the markets are going down, the markets are going down. Ultimately, I am a perma bull when it comes to crypto assets. I'm a long-term like big fan and supporter of the space, and I believe they're gonna be around indefinitely. And I think best case scenario that they become like their own asset class, and they become a part of like the what is it, like the the S&P 500 index. Like they become their own industry next to like healthcare and energy and like fuel and like, crypto would be like its own, like the 13th part of that in the future. Currently, the S&P 500 is broken up into 12 categories. So personally, long term, I'm still very bullish on crypto. If you yourself are not really someone who trades actively or takes positions or adjusts their positions on a weekly basis, it might not be that relevant to you to kind of pay attention to these trends, because they may just serve to like shake you out of a position rather than adjust your position with the intention of growing your long-term stack in crypto. There is definitely a really solid approach that I also take part in, which is dollar cost averaging. And that's, like for me, for Bitcoin, I believe in Bitcoin long term, and I have a like a standing order at Gemini to buy an amount of Bitcoin in dollars, like let's say $200 every 15th of the month, and I don't pay attention to the price. It's an order that I set up once, similar to like a car payment or something, and now it just is on auto purchase. That type of order is advisable for somebody who wants to build a position in crypto but doesn't want to try to time the market or want to participate in trading or adjusting their position. So by doing a fixed amount of cryptocurrency purchasing at a fixed interval in time, like I do once a month with $200, we'll say, uh, that will give you over time the best average cost of this asset, and is generally speaking a good idea for entering a volatile market or any asset that has a lot of volatility. Unless you're trying to time the volatility of the asset, your best bet is to buy in fixed intervals. And you don't have to do it once a month. If you want, you can do it once a week or even every day, like buy $5 a day or something like that. And that way, at least you build your position. You don't really have to pay attention to these price swings, and years from now you'll have an average cost basis of your position. So that's always a good piece to kind of like keep in mind. If you are overwhelmed by seeing a lot of like I think it's going down this week or it's going up this week, and you don't know what to do with that information, just know that you don't have to act on this stuff. Like long term, it won't matter if you buy Bitcoin at 20,000, 30,000, or 40,000. If it climbs to like 100, 200, 300,000, it's not that isn't going to make or break like the long term potential of your asset. So keeping all that in mind, I'm going to jump back over to, let's do a little bit of DeFi on Wax right now. So with our kind of market sentiment established, where we think the market is going to move down in the coming week, let's take a look at what we've been putting into our DeFi wallet. So I think TacoSwap and DeFi Box are going to be our two sources here um, for our investment so far. So let's start by looking at DeFi Box, because last week we kept, I think it was like 40-ish wax or so in USDT and wax, and we also moved about 40 wax into Box and wax. And the reason we did that was because there was an existing arbitrage between the the current spot price of Box and the on the Wax blockchain, and the spot price of Wax, I'm sorry, of Box on the EOS blockchain. So I'll actually show you that right now. But let's see how we've done by participating in that pool for the week. So here we go. Just signed into our DeFi wallet. Now I can go to my. And okay, nice. Not too bad. So our USDT is almost back to 50 wax. And then our USD or a regular wax, we're up about 3 wax. We had about 40 wax here last week when we started. And we can actually get a better overview of that shift. Here you can see we started with 18 or 19.9 wax on that, and now we're at 21. So since this is a bilateral metric, each wax on this side is counterparted with another token, in this case Box on the other side, worth the same thing as what the wax side is worth. So if we've gone up 2 wax on the wax side, we've gone up 4 wax in value. And then same, we can scroll down here and you can see our USDT position has also appreciated on the wax side. And with our wallet's stated intention to grow in wax balance, this is what we kind of want to see. Let's see how at the same time over on Taco Swap how we've done. So I got to log in Taco Swap as well. So the other positions we have for this wallet are, I think, Honey Wax, NFTV Wax, and Wombat Wax. And those are all forming here. So I'm going to sign in over here and take a look. And go to liquidity. Yeah, okay, and here we are. So we have, this was close to 40 wax as well. So we're down slightly as the cost of honey may be down slightly, but not much, like less than 1 wax. And again, bilaterally, so less than 2 wax, which would be close to 4 or 5% of 40. So that's not so bad. Also 36 is still about even on this one. And then all of these are more or less staying the same. So let's see what we want from participating in that is all this yield. So we're earning yield in Honey, Taco, NFTV, and Wombat token. So let's start by claiming all the yield here. And then let's take a look at our open meal positions and see how much runway do these rewards still have left before we make any further decisions. So I'm going to meal and try to click on stake before it gets stuck thinking. And we can see here we have 12 days left on our honey before the rewards here stop. 1 day left on the taco reward side of the NFTV reward still playing for 23 days, and then 69 days left on the Wombat token reward still. So since we do adjust our position in these pools every week, none of these are going to be, except for the taco side of this pool, none of these are really going to be depreciating our reward structure within the next week. So we could theoretically leave these all alone, but let's make a decision here based not just on when the rewards dry up, but also on what we think is happening with the price of our assets and what other opportunities are currently attractive to us here. So the first thing I want to see is we also earned here for being in the box wax pool. You can click on mining, and we should have a balance in box tokens to claim as well, or we should anyway. And if it's not loading like it's not right now, what I can do in the past have had success with is swapping the node by going on the node here. And let's try from Canada. So let's see this. Maybe this. Okay, so there you go. Canada lets me see my box rewards so far. Oh, and apparently I have some CMW in here as well. That must have been from a long time ago, because we did farm the CMW wax pool back when that first launched, but we left before the kind of bottom fell out on that price because it was looking like it was dropping too aggressively for our comfort. So there we go. I just claimed some box rewards. So now let's take a look here. The box rewards, the box pool is paying 13% APY. So that's really nothing compared to what we're getting here. 150 being our lowest on Taco. And then as far as the token pairs, we have honey and wax. I could see the value of this. I like the honey token. I definitely like it a lot. Around $1, 1.4, 1.5 wax. It's still about like 1.9, I think, at the current rate. But my potential worry with farming honey token is that everybody who's farming honey token sees that in 12 days the rewards are ending, and I'm not 100% sure if they will be extended or not. So it might be a good idea actually to talk to Ben of NFT Hive and ask if there's a plan to extend this. But if there is not, and it's best to assume there's not when it's displaying what the rewards are left, we should assume this is correct versus just try to speculate on, oh, but he'll probably add more. I mean, he might, but now we're just playing a guessing game, and as an investment strategy that doesn't fly. We're not trying to guess, we're trying to take the information we have available and make decisions based on that. So assuming that it is only 12 days, the worry I have by being in this pool for the remaining 7 days before we'll make another adjustment is that that would only leave us with, 4 days or so of runway, 7, 8, 9, 10, yeah, 5 days. Sorry, I'm like counting on my fingers over here to go from a 7 to 12. But yeah, so what that means is that as the rewards on this pool come to an end, it is possible that people who are participating in this pool, like ourselves, who are doing it so for a return, you know, paid in honey, but we're trying to grow our wax position, that people who are trying to follow the same strategy would exit this pool preemptively before the rewards end, so that they can then sell the honey side of their position into a pool that still has liquidity depth available, um, while the rewards are there. And then the fear I have is as the rewards go away, so do people who are here to farm them. And then as those people exit the pool and sell their honey, the price of honey can come down quite a bit. So us being in this pool potentially for the coming week, if this exodus starts to happen within the next 7 days, we would basically be the exit liquidity for people exiting, trying to basically front run the end of the rewards. Uh, so that's kind of a worry I have for honey right now. I do like the token quite a bit, but I'm a little concerned that we might be exposed to that, kind of like people leaving with their honey tokens and swapping them back into wax, waiting for the next reward. And part of that is also informed by we've been, participating in this pool for a while, and I've been paying attention to the honey token. And in the past, when the rewards have ended, they did not immediately become renewed. And when the rewards ended last time, we saw the honey token price fell to like 0.6 or something wax, like very, very low compared to what, currently is almost 2. So um, there's definitely a lot of incentivized people participating and propping up this honey value. So it is a little bit of a concern. So we might take action by reducing our exposure to that pool this week. But the opportunity I want to see has to also be like worth us making a move. And that opportunity, I think, currently exists on DeFi Box. So we can see we've gone up in our position on DeFi Box from 40 wax to 43. So a little over 10, like let's say like 15% or so that we've risen in our wax position by participating in this pool. And that comes not from the rewards, but from the fact that the box token has appreciated in terms of wax. So when we started this position, I think box was close to like 16.8 or something. Now we're at 18.2. As far as box value denominated in wax. And you can see that here over the course of the week. We've just been climbing and climbing and climbing. The reason we expected this to happen is because there exists a pretty sizable arbitrage opportunity between these box tokens on the wax blockchain and the box tokens on the EOS blockchain. And that arbitrage opportunity is still significant. So by that, I can show it here. You can see currently a box token on the wax blockchain is selling for $1.21, denominated in wax. But at the same time, if I toggle over here and go to the EOS blockchain, you can trade your box tokens for $1.76. So like more than okay, I think it was 29 on wax. So almost 50 cents more once you get your box tokens over to the EOS network. So there exists the opportunity for people to come to wax, with wax that they've bought on an exchange for, $1.21, to trade that wax for box, bring the box back to the exchange, swap it or withdraw it from the exchange on the EOS side, and then sell it on the EOS side to pocket the difference between, the spot prices on both markets. Personally, I don't exploit that arbitrage because the bridge that lets me move box tokens from the wax side to the EOS sides is a centralized exchange based in Singapore that requires KYC, like know your customer information, from its users, and does not service the United States. So I would have to be able to produce proof of residency outside of the United States to make an account there. So I'm I'm geo fenced from participating in this arbitrage opportunity. But I do believe the opportunity is substantial enough that people are incentivized to make these moves. We thought this already last week, and all of last week, you can see, they are moving slowly from, by pumping the price in terms of wax. All of this happening at the same time as wax is losing a bit of value. It makes this like an attractive position, not because of the reward that we get for participating, which is only 13%, which is, not bad, but it has to do, for me, the opportunity here is, if we can be in this pool supplying liquidity while the price of box token goes from $1.20 to $1.70, we're going to capture more wax. We're going to buy the box tokens, today, and then by this time next week, hopefully the box token price will have come closer to what the price is on the EOS chain, and that increase in price in dollars will have seen our wax side of this liquidity position increase. So this seems like an opportunity for us to grow some wax, while the honey position currently feels a little bit um, like I have a reason to be concerned about the wax side potentially being sold out as the rewards timeline comes to an end. So, in order, like, to, just talking a bunch here, but in order to act on this now, I think let's scale out a little bit of our honey position. I think we're at 40 something. Let me jump over here. Yeah, let's scale out 50% of this. So you can come here and say remove, and it's nice it has a little 50% slider for me. Perfect. So I'm going to remove 50% of the liquidity that we have in the honey pool. And then I'm going to sell the honey side into wax. While I do that, I'm also going to be selling the rewards that I earned for the week into wax as well. So I'm going to start by selling. We earned 51 bet. That'll turn into almost 2 wax. That's a pretty not bad take for 1 week. And then we're going to do the same with our honey rewards. So this will be honey reward that we earned, plus, of course, the honey we just pulled. We earned, I think, close to 1 honey this week. So it's still 1.7. And this is almost 2, again, on like a 40 wax total. So this is like 5% that we made in a week. And let's not do that. Let's do the full amount. There we go. And then let's look really quick here what we have left now. 23 wax. And what other tokens do we have in here? Let's take a look. Got a few ones that I'm not familiar with where their liquidity is. And then we got some taco. Taco liquidity is definitely here. So that's 0.2. We'll sell that for now as well. And then you see we have a few tokens worth of dust here. I don't know necessarily if, Shing probably, but SSN, for example, I'm not super familiar with this asset. And I'm not sure if the wax counterpart for it is even here. And it looks like it's not. So what I would do in this case, if I wanted to sweep all of these tokens back into wax, is I would just use wax on edge, which is Wapaka's tool. Waxonedge.app. And then I could, come in here and I can take, let's log out with this wallet and connect Anchor wallet. And it'll tell me basically which exchange has the liquidity for the asset I'm trying to trade. And if it's just a straight like trade, like here, PGL to wax straight on Alcor, this would not cost. See, the platform fee is free for something like that. So it would be literally the same as if I went to Alcor, signed in, and made this trade. So by coming here to Wax on Edge, I can, take some of my tokens, like here, let's say BRIX. I don't know what that is. So I could take this and it will show me for the amount that I have. The best deal is, if I want wax, you can see there is not a direct pool for wax. So it would do BRIX into Taco on Taco Swap, and then Taco into Wax on DeFi Box, which apparently is currently a better deal for Taco than Taco Swap. Because it is going to route between multiple exchanges, this will cost the platform fee. Um, but in general, when you trade on Wax on Edge, it's like a cool little way to, connect all of these different like pairs on different exchanges. Like here we go. Oh, this is also like on Alcor, I'd have to switch into Aqua, and then on Aqua into Wax on Taco Swap. But this will route that all for me in a single transaction, and it'll show me which exchange to use for direct trades and won't charge me for that. And I don't need to sign into all these exchanges to make all these different trades. So I really like this. Shout out to Wapaka there. Nice job building this. And I know he's working on future tools for this. And one of the tools we were talking about that he's been requested a few times, and I was one of those requests, is for a sweep your dust kind of function, where you could then go through a wallet like this one, where there's all these tiny balances of all these different tokens, and you could choose like all of them and be like, okay, turn all of these into Wax, and it would do that all in a single transaction. I'm still waiting for that, rather than trying to go through here and get 0.0029 Wax for this one and then try to go to the next one and the next one and the next one. So for now, I use this platform quite a bit. I know some people, like Lewis, is a little bit too cheap to pay the additional 0.03%. So he'll actually, he'll use this to see what the path is, and then he'll just go to Alcor, trade his AMG into Aqua, and then go to Taco and trade his Aqua into Wax to avoid this fee. But even if you do that, this is a nice tool to show you where that path is. Which, for example, I traded my Taco into Wax a minute ago on Taco Swap. But it looks like if I had done that instead on Wax on Edge, I might have gotten a better deal, because 0.11 Taco. Oh, interesting. It's actually a better deal to swap Taco into SC and then SC into Wax than it would be to go straight into Taco on Taco Swap or DeFi. But that's in this amount, 0.011. If I did one, oh, it looks like Taco into Shing and then Shing into Wax is better than direct. 10. There you go. And once you get to like the higher numbers, it's Taco into Wax is a better deal. But even though this is all happening on Taco Swap, this is a better deal. If you had 100 tacos, you would get more Wax for it. If you did Taco into Shing and Shing into Wax, and knowing that would have taken you quite a bit of manual fuckery, So this tool will tell you that automatically. Very cool. But yeah, so let's see. We have kind of our goal here. I think we want to do a little bit further into the box Wax pool, and then let's see if we want to scale out of anything else. So going back to my liquidity, we still have Wombat and Wax. Wombat and Wax still has quite a long runway for how long these rewards are paying out. Oh, whoops, I'm on Salsa. Let me check here. 70 days, so 3 months or 2 months still, and then 10 days more. So I'm not so worried. Also, Wombat, for the most part, I know its liquidity pair on the Polygon and on the Ethereum chain is USDC. So even as the crypto market sinks, Wombat is a little bit hedged from that sinking because its counterpart liquidity is not exposed to that price action. Meaning, sure, on Wax, it is Wax and Wombat. But because Wombat trades on all these other blockchains, and on those other blockchains, it is not paired with Wax tokens or with Ethereum or some other crypto asset that is tied to the price of the crypto markets, but rather a US dollar pegged asset. As the crypto markets sink, the liquidity counterpart to Wombat does not get affected, and it becomes potentially more resilient. And we've actually kind of seen that in the last few weeks too of trading. I wonder if we can actually see Wombat on here, but you can see as Wax, is moving. Like, let's see, this is the daily chart. So we have like 1, 2, 3, 4. Like, this is about a week. You got a little bit of a pretty steep drop off from like 8 cents down to 6.5 cents. And let's take a look if we can find Wombat. Wombat. Oh yeah, on Qcoin, right? It trades on Qcoin. I forgot about that too. So Wombat very much not experiencing that sell-off in the same amount of time. So this is also the daily chart, and you can see it's pretty much just flatlining. Flatlining and approaching the middle B bands line again. It's been in an uptrend kind of on the daily. So Wombat, I think, is a little bit more resilient to the crypto market index, or the crypto market sentiment we've pulled out of chart reading today. So I'm comfortable with the runway, with the way that Wombat liquidity is kind of like bolstered by USDC on other chains. So I'm okay with leaving this position alone. I'm happy that we've trimmed this one down a bit, and then the NFTV I think is still like an 8-ish wax position. Oh yeah, almost 8 exactly, which I'm okay with the amount of exposure we have there to keep that going. That one is paying a pretty substantial APR, and we are selling that each week, which I don't know if I've actually sold that yet. So I can, I can check this. Let's see. So this would be NFTV token into Wax here. Let's just see. It is 0.34019, and I wonder if that's the best deal. So if I come to Wax on the Edge now, I can check NFTV token and take a look. 34019. It's literally the exact same price, and we can verify that. I'm not paying any extra fees here, and you can see here, 3401911319113. So just kind of like to put a ribbon on that. This is not costing me anything additional to use Wax on Edge to make this trade, even though the trade is happening on Taco Swap, because it was just a straight trade. But yeah, nice. So now that we've traded kind of like all our yield from the week, and we've scaled down our Wax position a little bit, I think we should add that into the DeFi box pool. So I'm going to do that over here by going to swap. I have my Wax of 23.5. So I'm going to do half of this into box tokens, which I already have a couple box tokens. So we made 0.07 box tokens from our yield. I'll just leave that alone. It's not worth like swapping and then swapping back. But 23.5, so that would be, what is that, like 11.5 gets us to 23. So 11.75 gets us to 23.5. So then let's do this. We'll swap that, and then we'll add that to our existing liquidity position. Confirm. We'll go to, oh yeah, it's still on the swap tab on the liquidity page now. And then I'll do, give me the full thing. Oh, that's a little much. So I have to choose that side and sign. Done. Cool. And now when I go back to it'll show we now have 66 wax worth of liquidity in our box Wax pool, 50 around in our Wax USDT. I definitely want to keep this because as Wax, if Wax continues its sell off, this is going to climb in Wax value, which is what we want. And then we're going to keep the remaining liquidity on Taco Swap that we have left alone. Again, Wombat liquidity is mostly USDT, or I'm sorry, USDC on Quick Swap over on Polygon Network. And for that reason, I'm not as uncomfortable holding it as I am holding the other two, which are denominated with their liquidity base in Wax mostly exclusively. So if Wax falls in value, so will Honey, so will NFTV, not necessarily Wombat. And because our stated goal, of course, is to make more Wax, if Wax falls in value and Wombat token does not, then the Wombat token, the 900 in this wallet, will start to sell into more Wax, and we'll get what we want, which is a bigger position in Wax over time. And then the same will be true for what we just done on DeFi Box. We have our Wax box token, and what we're expecting to see is this arbitrage opportunity that currently exists between the EOS network and the Wax network, where on EOS you get the one box for $1.76, while currently on Wax that same token is $1.22. So expecting to see that, maybe on EOS it'll come down a bit, but hopefully on Wax it'll come up a bit, and they'll meet kind of in the middle somewhere to eliminate the arbitrage opportunity. And us being in this pool now should give us the ability to, be exposed to this. And we've already exposed ourselves to this last week, pretty much right at the opportune moment here, and made something like 20% from just being the liquidity counterpart to this kind of arbitrage. So great, we don't actually ourselves have to do the arbitrage. We can just put up the liquidity that arbitrage traders are trading into. And that's kind of the strategy here. So that should summarize what we want to do for the week. Let me really quickly add up what we own now in these wallets and see how we've done with our initial 100 wax. So I'm going to bring up a calculator, which you probably can't see because I'm only sharing my web screen, but 66 plus 49 is 115. And then I'll add plus 36 plus 36 because it's on both sides of this one. And we'll do plus 9.5 plus 9.5. That's like 19 plus 19 plus, and then we'll call this one 8. So that puts us at a total of 214 wax we started with 100 wax in this wallet. So by just participating in fungible token like DeFi strategies, liquidity mining for the most part, we've more than doubled our wax now in less than a year. So not too bad. We're doing pretty well. Let's see if we can keep at this or if we're going to like lose it all or how this plays out. But for now, I think we've definitely done a decent job of adjusting our exposure to some of the risk involved with our liquidity mining position by scaling down the ones that that we feel have the potential to lose us value in wax more so than the ones that don't, and then scaling into positions that are currently opportunities for making some wax, like the DeFi box tokens arbitrage opportunity. So there we go. Let's see. Oh, it's Taco Tuesday. Nice. Yeah, that actually times out pretty nice. I wanted to pop in. I wanted to talk today about the current crypto market prices, and I wanted to take some time to adjust our position because I do think that there's some strong indicators in the charts that we are moving down in the coming week. And because of that movement downward, and because of the fact that the honey tokens are going to be pushing the end of their reward runway by next week, Tuesday, I wanted to get in at least and, adjust our exposure to those pools today because, it's something we do live together and I don't want to do it alone. So, and I also don't want to end up just being exposed to that while the markets are shifting. So it's nice to be able to adjust these on the fly. That's also another part of like DeFi positions like this, is that you can, get cold feet and exit, swap everything back immediately. Like if I wanted to right now, it could be like, oh, I don't really know what's happening. Let's just take our 214 wax into wax and like, let's sit on the wax for a week. So that's the nice part about this too, is that, if we start getting the sense that like, oh, we've done really well, like let's just take 100 wax off the table, you can do that kind of instantly. There's no like unstaking periods or vesting terms that we have to wait for, like there would be if we just had our staked wax. But not to make that sound like such a fucking drag, it's only 3 days for staking wax. There's definitely much longer vesting periods. Let's see. Oh, okay. What up? So yeah, usually Lewis is on with me. That's why I'm like, I'm kind of flying solo today. I'm not the. He's kind of like the wizard who runs the streaming stuff behind the scenes much more than I do. As far as he'll have like the soundboard going for people to like interrupt with we'll do it live, fuck it, or something like that. He'll have like the music and like he runs the giveaways and stuff. So he's kind of like missing today, and there usually is another person. He'll also be watching the chat while I'm, looking at my screen and looking at the charts and stuff, and he'll be able to interrupt me if there's questions or something. So yeah, usually there is two of us. My name's Max, and then he is Lewis. And yeah, so and then yes, every Tuesday we do like a little tech kind of coverage. Usually on Tuesdays we'll check out the crypto markets, we'll check out like general market sentiment, and we'll try to make an opinion for the coming week. And then we have like 100 wax that we started with to basically see if we could turn it into more wax by participating in DeFi on the wax blockchain specifically. And so we've been using that wax after reading the charts and informed by the decisions that we've made from the charts to then take positions like what we did today. So every week, all like that 216 wax or something, every one of the moves that we did to achieve that return was live on the stream. So if you were to go back to like the video on demands or something, you could, track back months and months ago and see how we started that and what we did to do that, to make it 216 from 100 wax in, I think it's a little over 6 months, which is not bad. But the whole idea is also that, it's possible, and we want to show that it's not like this nebulous thing that only like tech bros can do. Like you can do this with acting only once a week and only taking maybe like an hour once a week to make these positions, and you can still participate in these type of strategies. Usually what I like to do on Tuesdays is also like then dive into like a DeFi like thing, like a DeFi project or something that people are maybe unaware of, or that I'm really interested in. But since Lewis isn't here to like kind of keep me from going too far off the rails, I'm a little hesitant to do that. Let me also text Paul really quick. He just called me. I guess it's calling him back. But here, one second. Hey, babe, I'm streaming on my own here since Lewis is feeling sick. Can I call you back in a bit? Okay. Okay, cool. I'll see you soon. Bye. I love you. Okay, cool. Just sorry. Thanks for bearing with me on that. But yeah, let's see. Yeah, so there should be Twitch. Am I saying yes? There is Twitch videos. I think there should be re-uploads to Twitch and then YouTube. I think I dual cast there today, and then I think they get uploaded to YouTube by Mark or Lewis. I haven't been keeping up with that, but I'll double check and make sure. But the idea is, yeah, there should be a whole series that you can go through and like see all the different like strategies we've participated in over the weeks, and all of the different like sentiments that we got from reading the chart. But yeah, generally speaking, we've been relatively on it, calling the charts and the direction of the markets. And then I personally do a good amount of my income comes from like participating in DeFi and all this. So I pay very close attention in my personal free time as well. So I guess one thing I'd love to share here, while Lewis isn't here to kind of keep me in the guide rails, I've been getting very comfortable with perpetual markets on in DeFi in general. And I really, really like the flexibility of trading perpetual contracts. I've showed it off a little bit on stream, but maybe I'll show it a little bit again here. What that is. So a perpetual contract, I'm going to jump into the deep end of DeFi really quick, just because I love this shit. So when you're trading cryptocurrencies, usually like the general way people trade is, they'll buy an asset, hold it, and then sell it later. And then there's derivative trading, which you may be familiar with, like future contracts. So you could buy like a future contracts on an exchange like KuCoin. Pull up like Gains Network. But future contracts are basically like you can use like a stable coin or Ethereum or Bitcoin or whatever, some type of token as your collateral, and then you can take a position. Like let's say you take $100 of stable coin, or $10 if you want. You could take $10 and then say take a position long or short on Ethereum, long, being if you think it's going to go up, short being you think it's going to go down, and you can purchase a future contract, let's say worth $100 of Ethereum, that expires at a specific date. So then you only ever put up $10, but now you have the exposure to the price movement of $100. But because from 10 to 100 requires 10 times leverage, you're borrowing that difference, and the more that you borrow, the more aggressive your liquidation price becomes. So let me show you what that looks like kind of on a chart here. I'm going to go to Gains Network is an on-chain perpetual market protocol. And I can go here. Let's see which I want to switch to Polygon. Let's see. So this one's on Polygon Arbitrum, and we can also run it on the Mumbai testnet, which is, here we go. I'm switching from Optimism over to Polygon. There you go. So it lets me sign in here. Right now I'm just on Quick Swap. So here, if I go to Open G Trade, that's what I'm looking for. This is a perpetual market. So here I can connect my wallet directly. I'm just going to use MetaMask for this example. Switch account. I'm switching from Polygon to MetaMask there. And you know what I can actually do is let's show this off on testnet. We don't have to use real money. So if we go here, I have the Mumbai testnet. This is the testnet for Polygon network. So I can just toggle here. You can see it runs on the mainnet for Polygon on the main Arbitrum layer 2. This is an Ethereum second layer chain. And then Mumbai, this is the testnet for Polygon. So you can see here I have now, in my wallet, whatever amount, I have 8,690 DAI tokens. These are on testnet, by the way. This isn't real money. You can go to a faucet and it'll give you 10,000 of these for free. But either way, so what you can do on a perpetual contract market is you can trade using DAI is my collateral here, but I can take positions in any of these assets. So you can see there's crypto assets, there's Forex, which Forex stands for foreign currency exchange. So this will be like euros, pounds, dollars. There's US stocks, and this is like actual shares. So you got like shares of Apple, shares of Facebook, it looks like. The market's currently closed for the stocks. There's US indexes. Also, markets are closed, but you can see you have the with DAI. This is the Dow Industrial, and then the QQQ. This is the Nasdaq. The SPY is the S&P 500. So these are major indexes. And then you also have, I think, commodities this is gold and silver. So yeah, basically this is silver and this is gold. So 1813 is current price of an ounce of gold. And so what I can do here is let's stick to crypto for this example. Let's say I'll just stick with like BNB, for example. BNB is having some pretty interesting dynamics where like their banks are like cutting ties, but they themselves had issued currency, like they have their Binance token, the BNB token. They potentially have like a similar situation as FBX going on, where they have collateralized their own token to take loans in actual equity, which if their token then loses value, it's potential that their collateral no longer is solvent for the loans that they take, and they become margin called by their banking partners. It's kind of a complicated issue to be in, but this is a token that maybe you don't have confidence in its performance long term. Like you think this might drop in value, but you also don't own any of it, and you don't want to participate in making an account on Binance or using Binance Smart Chain on your wallets or whatever. Here I can use, like right now I'm on the Mumbai testnet. I could be on Polygon, I could be on Arbitrum. Here I can use my US dollars, my DAI token, to take a position in whatever of these assets I choose. So right now I'm using BNB, and I could take, for example, a market position short. So I'm toggling over to short, and I'll do let's do $100, and then I could take this. Right now I'm using 5x leverage, so this position becomes worth $500 because I'm, borrowing the difference. And in order to borrow that money, I'm now also agreeing to this liquidation price. So you can see, as I increase the amount of margin I want, like the amount of leverage I'm using, my liquidation price gets more and more close to the actual spot price. And so if I'm betting short, I want the market to go down. As it goes down, what a short position basically is I'm selling these coins right now that I've borrowed, and then I'm going to buy them back later. So I still have to buy them back, and hopefully the price is cheaper so that when I buy them back, I pocket the difference between the price I sold them at earlier and the new price that I bought them back, and that difference becomes my short sell profit. Same goes for long. Obviously, if you buy now and then sell later, you hopefully sell at a higher price, and then that becomes your long trading volume profits. So with this type of derivative asset, this is effectively a futures contract without an expiration date. So that's the perpetual contract. So I can do a 5x leverage. There is a minimum, I guess, for how much a position has to be worth. So let's just do $500 instead of increasing our leverage. And then we can stick to 5x. And then here we go. Let's do a practice market sell. Then so I'll set my position like this. It'll ask me to sign the transaction from my wallet. If I'm on a mainnet, then it would be a mainnet transaction. And then you can see here it fills directly onto this order book, and now it'll start tracking once this is executed. 1, 2, there we go. So now I have my position open, and you can see it's already, as the price now, if the price climbs. Oh, and by the way, it filled the position here because when you market buy, it's buying based on the current like market price, like bid ask spread is involved. So if you're trying to make this, you'd want to set this to limit and then define the price that you're not willing to pay more than. Uh, and that way you could basically place an order. It'll sit on the market and only fill when the limit price is met. And you can do all this stuff from your wallet directly on these like blockchains, and then take positions not just in BNB but also in forex or stock assets and stuff like that. So this is like, I really enjoy this kind of trading. It's definitely like, I'm going to leave this position open and see next week. We could come check on it, and we'll see if it's like, how much has it cost in interest for me to keep this borrowed position open, because obviously I've put up $500 of my own money, but I've also taken a loan of 5 times that. So this position's worth, what is that, 5, 10, 15, 20, $2,500 total. So I've taken a $2,000 loan against just the $500 collateral. So that means I have to pay interest. That interest rate will be determined by how many people are short versus how many people are long. If everybody's long BNB and I'm the only one short, then the long traders are actually paying me to take my position. While if everybody goes short, then I have to pay interest. So there's a funding fee that is dynamic based on the supply and demand metric of the assets that you're trading. There is really, really good statistic breakdowns for these markets over on Dune. If you're unfamiliar with Dune.com is a fantastic DeFi like information aggregator. It's an open source piece of software that you can basically use to read and then create interfaces like this dashboard that will show blockchain data, but will chart it for you. And so, like, for example, you can see it'll show me that this is the total number of traders and stuff. Like, this is all real-time information that updates like every time something happens. And so, like, all these charts and all this information is readily available on here. So you can see, for example, like the GDAI. So this is the counterpart to the trading app. There's $45 million worth of like DAI volume liquidity available, and that liquidity is split here. You can see, it used to all be on Polygon until they launched on Arbitrum, and then now that it's on Arbitrum, interesting to see the Polygon liquidity didn't migrate to Arbitrum. It's just Arbitrum added a shit ton of liquidity themselves. So today it looks like there's only $14 million on Polygon, and Arbitrum is actually sitting at 30 million. And that's where that total 45 comes from. So you can see like all the stats broken down for this. And again, if you're unfamiliar with Doom, check it out because you can come to Dune and you can, like find like let's see, new query. Oh yeah, no, not like that. Discovery. You can find like a bunch of pre-made dashboards that people make. Like here's Maker DAO, for example. Maker DAO is the DAO that issues DAI stablecoin, which is the stablecoin that we were using just now to create these positions. Oh, and you can see here as the price is moving, our profit and loss is changing in real time as well. So you can see it's currently about we're 1% down or so. But hey, if the market climbs higher, we're going to lose more. And if the market starts to fall and sell off like we expected it to for the week, we'll do well. And then let's see, we should see our liquidation price. Right now I'm on the 1 minute chart. You can toggle this chart as well. We go to the 1 hour. And then you can see it'll also chart my liquidation price. So I'll get liquidated if the price climbs all the way up to here. And what that means is the position will be closed by the market and my collateral will be seized. So I'll lose the $500 I put up, but the $500 I put up to make this $2,500 position is the maximum loss I can experience for this. There isn't more than total loss risk for this type of trading, just like trading future contracts. And again, this is future contracts um, without expiration dates. And the way that works is that you're paying a funding fee in real time. So this is I really like this protocol. There's also, if you're familiar, like I'd say the biggest of these is GMX.io. GMX is another perpetual market. This one trades on Avalanche and Arbitrum, but if I launch the app here, it's going to ask me to agree to the like terms. But I can see here on the dashboard, there is $500 million worth of liquidity available to trade against. You can see that liquidity is supplied in these different assets, and then I can come, trade. And in a similar way, I can create long and short positions here, short, long. I can use leverage, but unlike on Gains Network, I can create a position from any of the available liquidity assets here. So I could go, let's say, use Bitcoin to short sell Ethereum. So if I did like, 0.01 Bitcoin, I could create a 0.7 short position against Ethereum using this leverage. And then you can see here's like what my liquidation price becomes, what my fee, and then down here, you can see what it costs to maintain these positions. So this one right now will cost 0.0045% per hour. So it's kind of pricey. And then you can also, if you don't want to trade, obviously the trading that happens on this platform is counterparted by this liquidity. You can just participate in the liquidity supplying. So you can see, for example, the 500 million in liquidity is 130 million of that was transacted in the last 24 hours, and it earns an ass load of money in fees. These fees get pushed into this liquidity pool. So, sorry, this is GMX. This is the liquidity pool. So you can see 51% of that pool is currently consisting of stable coins. The remainder is Ethereum and Bitcoin mostly. And then you have like 0.9% Chainlink, 0.6% Uniswap. And these are all stable coins, FARX, DAI, USDT, and USDC. And most of the stablecoin liquidity is in USDC. But yeah, if you were to supply liquidity, you could come here to earn. You'd come here to buy GLP. You could use any of the assets that it wants to then purchase. Like, let's say if you use ETH, 1 ETH will get you 1,692 of the GLP. And then you can always turn GLP back into any of these other assets by unwinding the liquidity. But once you have the liquidity in your wallet, it sits here and automatically earns its cut of the rewards and all the reward fees and stuff, and those are always paid in Ethereum. So you'll have your liquidity, and then you can come here and earn Ethereum if you want to. So you can do stuff like that. And then one more such protocol that I really like and I've been getting into lately is DYDX. And this is not available to United States residents, but it is a decentralized platform entirely running on the Ethereum network. Uh, and so I probably won't even actually be able to open this app because I don't have a VPN running here and I am in the United States. But you can see this one will offer all of these different tokens, which is it's nice again because you're able to take positions in tokens that don't necessarily trade on the Ethereum network. Stuff like Tezos, Tron. Let's see what else. Yeah, the Ethereum Classic won't trade on Ethereum's network. Thorchain, Stella, these are all like their Algorand. Zcash is another that's a proof of work blockchain. Uh, and these all trade normally. Synthetic, that's not. Avalanche doesn't trade really on Ethereum. Compound definitely does. Cosmos does not. Monero also, that's its own blockchain. Solana is not one that bridges into Ethereum, so that's a nice one. You can have access to Litecoin as well as Bitcoin Cash, Dogecoin, Polkadot, a lot of crypto assets that you don't necessarily have access to directly if you're using an Ethereum wallet and just Ethereum mainnet. So the way this one works is also really interesting. If you jump in, it probably won't let me do it, like I said. But yeah, you could jump in here, and the way you do it is like you connect your wallet, uh, and then you add liquidity to their smart contracts. So like I could use my MetaMask wallet here. I'm gonna connect. Yep, connect. Oh yeah, okay, and it'll tell me I can't do it because I'm in the United States. But if you did connect to it and you weren't in the United States, you could then literally use like your USDC, deposit it to fund to fund an account like this, and then you could come here to trade, and you could start trading any of these markets, making long, like market or limit, long and short sells, and then it also has options like stop limit, stop market, trailing stop orders. So these are like a little bit more advanced features that don't necessarily exist currently on GMX or Gains Network. Although Gains Network has stop orders, they don't have trailing stops or things like that. So really cool for non-American citizens, I suppose. The really cool part about this market is that you supply your liquidity, like you supply your collateral, like your USDC, to their contract, and then you have your balance and you can trade it. But making trades on this platform does not require you to use your wallet to sign the transactions. So you saw how when we made our transaction here, it popped up and said, "Okay, sign it," and then broadcast to the blockchain. The way that DYDX works is you just use the interface and it uses its basically layer 2, like private layer 2, and then it'll populate to the blockchain like every few hours. But because of that, there are no fees at all to broadcast transactions, and this platform pays for your first let's see if we go to rewards. This one pays for your here the fees. The fees are free for your first $100,000 every month. So if if you're not making an ass load of trades, this is not a bad option for on-chain decentralized, trading protocol that is doing perpetual contracts as well. So what you end up being able to withdraw isn't the currencies that you own, but the USDC that is your backing. So like if you did, let's say you came in here, you added $500 USDC, and oh, by the way, if you have a $500 amount that you're depositing, they will pay the Ethereum gas as well. So it's all very accessible for any amount at $500 or beyond. Below that, the gas fees to fund an account like this are like $30 to $40 in Ethereum. So it is actually worth it to do $500 increments as to not pay that $30, $40 gas fee. But it is possible. But anyway, what it is you have your USDC in an account like this. You take positions like here. If I go to trade, if I were to take a position in, let's say, Ethereum, and I buy Ethereum, let's say I put my $500 in here and I use it to buy $500 worth of Ethereum. I buy it, it sits in my wallet. I come back to my profile, I can see it has, the Ethereum in here. And then let's pretend Ethereum goes up in value so that now my $500 is worth $600. And I want to withdraw some Ethereum. The withdrawing of Ethereum from this platform is not possible when you then go to withdraw. you will withdraw back USDC, but you can now withdraw $600 worth if that's the value of your account. So keep in mind, if you do decide to use a platform like this, when you buy crypto assets here, you are buying derivative positions backed in USDC, not actual crypto positions. So, keeping all that in mind is important. But this is an interesting platform as well. And this has been around for several years, and they do ass loads of volume, like fucking ridiculous amounts. Let's see what it's. Yeah, okay. $1 billion in the last 24 hours. So yeah, like this is serious protocols. This isn't some like fly by night nonsense. And you can check all of the like on-chain metrics too. Like if you look at let's see if we come up here to more, you can find like the documentation, and in the documentation you can find like the contract addresses, and all that stuff is all you can find the third party audits too here, and you can read those and get yourself comfortable with the idea of using something like that from a safety standpoint. But those are a few I guess, I have Lewis here to keep me on track. I got one more I'm going to show you. This one I really like too. It's called cap.io. This is another decentralized perpetual market. This one, they just launched their V4 like 2 weeks ago. Very, very new. Because of that, so this one's on our Arbitrum network, by the way. So already many billions of dollars in volume, and all of that is years of operation. But the V4 marketplace is this one, which has just been launched. You can see there's crypto, there's forex, there's indexes, the QQQ and the SPY, and then you got metals as well. So no individual stocks on this platform, but still similar deal where you can trade some of these different assets. And the cool thing about this one is you can choose between your collateral. Right now it's set to Ethereum. You can choose to make it USDC, and you can take positions collateralized in USDC, and then you can take different positions collateralized in Ethereum, and these two markets are separate. So that I really like that. That's an interesting approach to this. And so the liquidity counterpart for these markets, if you're trading in Ethereum, is right here. You can see there's about $500,000 worth of Ethereum, 321 units that are available. And you can see the buffer balance is at 2 right now. Oh, 6,500 on this one. And $300,000 worth of USDC. So this is not anywhere near what the other protocols we looked at were, bolstering in their liquidity pools. Just really quick again to compare, that's looking at $500,000 in liquidity on GMX. We were looking at 30 million on Gains Network. And again, you can participate in those pools too here. So here's like oh wow, that is an error. There's no way the collateral ratio is 111,000% of what it should be. But yeah, it's because I'm not on the right network. So I'm on the test net. But yeah, this one had $30 million. This one had 500 million. And so looking at this one here with just shy of 1 million is not that impressive. But I do really like their protocol is 100% open source. It's 100% decentralized in the way that the team wallets really have no way to rug pull or fuck around with these deployed contracts right now. And there is audits and stuff, you can read about that as well. And they also let you create pretty complicated positions really easily with a very really nice interface, in my opinion. So the way that you could do that, for example, is let's say if I want to short sell Ethereum, I'm on Ethereum right now. So, come crypto, I'll say Ethereum. I want to say short. Let's say I want to use US dollars as collateral. And like if I had like $100 in here, I could then take a position. If it's $100, I could say like let me do $100 position, but with just $10 of collateral. So I could do 10x here. Then I would say the size I want $100. That would show here. I'm only spending 10. My margin is only 10. And then you could immediately open this. But then here's the cool part about this. This little like interface for this is really nice. I can click the options button, and I could swap. I could be like, oh, I want to set a limit price. So like this short, I only want to buy this short if the price climbs back up to, let's say, 1562. So I could say 1562. And then I want to take profit if this does open. I want it to take profit if it drops back to, let's say, 1544. So I could say 1544. And then I could say, yeah, so I would make 11% on this trade, right? And since I'm using a 10% margin, that would be $1 and 16 cents. And then I could say, okay, if this price does actually open at 1562, but then keeps climbing, let's say at the top of this wick, for example, let's say 1571, I want to get out of this position. So I could say 1571. And so this will now, with all of that filled in, I could create this order and it will basically place an order to short sell Ethereum here. But if the price climbs to here, it'll close that order and I'll lose, 5% of my capital, which is, okay, that's what I've set my stop to. But if it never makes it there and then starts to fall down again, it'll automatically take profit and it close out at 11%. So you can build all of that into a single transaction, which is really cool. So I do really like this one. And then the other side of this is, you can participate in supplying liquidity where the losers, if I make a trade and I lose money here, that gets paid into the pool. And that first goes into this buffer balance, and then this buffer balance gets paid to the people who have liquidity here over 7 days. So if I add liquidity, like let's say I add $100 to this pool, just by saying deposit into this pool, that will earn interest over time from the trading happening on this order book. And then the other opportunity here is staking the cap token. There's only 100,000 of these tokens total. So the fact that you can buy 1/100,000th of the entire supply for $200, I don't hate. And then you could stake it here, and you'll earn a cut of all of the trading fees in both Ethereum and USDC. So that's like a nice passive thing where if you bought, like, let's say you buy a position in cap token, you could just come here, stake it, and just forget about it. And then like years later, as people have been trading on this like derivative market for years, you'll have a cut of that. And if you had, let's say, one token, there's currently 18,000 in here, so one is quite a bit. One is like point like 0.04 or something percent of all of this pool. So this is an interesting one. I picked up some of these when the token price falls below 200. So this is one that I keep on my radar too. I like what they're building. It's all open source, and I like these types of market protocols. Like I like this type of product. I use this type of product. So yeah, that like gets you a little bit off the deep end here with some of the crypto nonsense that I like. And since Lewis wasn't here to like keep us on the rails, I wanted to jump into that a little bit. But yeah, if you guys have any questions about any of this stuff, definitely find us over in Discord and hit me up. I love talking about this stuff. And like I said, I do this sort of trading regularly. Like all of those platforms I showed you, I have active positions running on, and I'm testing them all out. And they all have their own pros and their own cons, and they all have reasons for them to be part of your radar here in DeFi and in trading. The coolest part about all of this stuff is you can participate in things like leverage trading using a protocol like cap.io with $10. And that's just not the case at most exchanges that offer, future contracts or leverage trading. Although I will say, like, KuCoin does make that pretty accessible. So if you do have an account at KuCoin, they do let you leverage trade with USDC, buy the futures contracts and stuff like that. Be aware of order processing when you do that kind of trading, because it's a little bit, there's rules to how orders are processed in KuCoin's order book. Those rules might not be the same as they are on a decentralized platform. By that I mean, if you open, let's say, a short sell at $1,000 and the price comes to 1,100, so you open another short sell at 1,100, and then the price comes to 1,200, and you open another short sell at 1,200, and then the price falls back down to 1,000. If you wanted to close your short sells that you opened on KuCoin, you would be limited to first in, first out order processing, meaning you would have to first close the order that you opened earliest, meaning the $1,000 order, meaning that would just be a flat wash. You wouldn't actually be in profit yet. So keep that kind of order processing in mind. That's not the case on decentralized markets. You could open those same 3 orders, and then as you drop back down to 1,000, you could close the 1,200 one that you opened last. Close that one and leave the other 2 open if you wanted to. So there are like those are some pretty massive benefits to doing this stuff on a decentralized market. But yeah, let's see. Let's check a couple comments here before I kind of wrap this up. Hi, sir. Have you views on Litecoin? Yeah, so Litecoin is in my opinion, Litecoin is like I'm gonna get like people who love Litecoin mad at me, but it's kind of like a glorified test net for Bitcoin. It's like a Bitcoin light, if you will. It's like Bitcoin has a test net, but there's no like it's like the Mumbai test net where like, oh yeah, these tokens are worthless, doesn't mean anything. On Litecoin, pretty much everything that gets deployed on Bitcoin seems to get deployed on Litecoin, and it's almost like the testing ground for the like Bitcoin deployments with actual value attached to it. I do like that you can dual mine Litecoin and like other script algorithm coins like Dogecoin. So like if you had for example like an Antminer L3 or whatever the Litecoin miners are, you can use those to mine Litecoin and Dogecoin at the same time, uh, not splitting your hash rate, but effectively doubling it. Meaning like your machine is running on one network and now it's running on both networks and they're both getting the same yield. That's an interesting prospect for miners, and that's definitely why I don't expect things like Dogecoin to go away very quickly, because they're definitely propped up by the script mining community who is, mining more legitimate projects alongside Dogecoin. But ultimately, Litecoin to me is like the promise of Litecoin was always, a cheaper, faster version of Bitcoin. Back when I first got into Bitcoin, you always would hear the, Bitcoin is digital gold, so Litecoin is digital silver argument. But in modern times, you can use layer twos on Bitcoin, such as the Lightning Network, to transact fast and cheap and in Bitcoin. And so I don't know that it's necessary to have like a Litecoin network as well as the Bitcoin network. So personally, I don't really invest anything into it long term, but I will use it to move funds sometimes between centralized exchanges, because almost every exchange out there accepts Litecoin, and it's much cheaper to transact and to withdraw and to broadcast transactions. So what I might do if I'm moving, let's say Bitcoin from Qcoin to Bitrex or something like that, rather than trying to do the withdrawal on the Bitcoin side and taking that into Bitrex, or Bitcoin from Qcoin and sending that to Bitrex, I would take the Bitcoin on Qcoin, trade it into Litecoin, then withdraw the Litecoin from Qcoin into Bitrex, and then trade the Litecoin back into Bitcoin, and ultimately get a cheaper deal that way. And so there is definitely a utility in Litecoin for that kind of thing, especially considering, again, Litecoin trades on almost every exchange out there. Oh yeah, there you go. XRP is definitely. I'll do that for the. See, I'm not. I don't hold XRP long term, but I might do that as kind of like swaps, in those tokens, and that has a lot to do with like the fees that they charge for withdrawals or for on-chain transactions. So that I will still use Litecoin for, but I am not the biggest fan of like it as a long-term thing. I definitely think it'll be around for a long time, but it's hard. It's hard for me to view it as anything other than like a glorified test net with a little bit of value attached to it for Bitcoin. So if I like what's going on Litecoin, I'll buy Bitcoin personally. But yeah, that's kind of like, let me wrap it up here before I get too far off the deep end. So thank you guys for joining me and bearing with me while Lewis is feeling sick. But I'm glad we were able to jump in, get that little stream going today to cover the crypto market movements. If you haven't had a chance to see Jerome Powell talk to the Congress, that video is definitely available on YouTube somewhere. Here, actually, I'll share it in I already shared it in my own Discord messages with a friend earlier, so it's definitely easy for me to pull up right now. Let me find that. Here it is. I'm gonna share this. They're talking about basically the markets and the adjustment to inflation upcoming, and then there's a few questions asked by the senators about cryptocurrency and the United States' regulatory stance on cryptocurrency, and some interesting answers, so you can kind of see what these lawmakers are thinking about and what their sentiment currently is regarding all these assets. So that was a fun one to watch. I think the cryptocurrency stuff, if you skip to like an hour 50 minutes in, it's not like it's not right off the bat, but it's about an hour 50 minutes in. Yeah, so take a look at that, and thanks guys for joining me. I'm gonna dip out. Unfortunately, I am not as well versed with Twitch, so I'm not sure how to raid. But if I could raid, I would be probably raiding Taco Tuesday right now. So there is a Taco Tuesday going on. If you guys want to venture over there, let them know. Let them know I tried to raid and didn't want to figure it out live. But yeah, thanks again for joining. And then of course, like, jump into Discord if you have any questions or you want to talk about any DeFi stuff. Or I think this is yeah, there you go. This is the link for the Discord. If you wanted to join, you can definitely jump in there, chat a little bit. I'm always happy to talk about this kind of stuff. And then, we'll be back on when it's Thursday, and we'll definitely dive into some of the NFT stuff that we weren't covering today, because there's definitely a bunch of new NFT developments here in Wax World. So yeah, thanks guys for joining me, and have a great rest of your Tuesday. And yeah, we'll tell Lewis things went perfectly well, if anyone asks. All right, later guys. See you, mahalo. Thanks for joining me.